I want to focus right now on 2011. Look ahead to that as we're waiting for them to break out into song. Perhaps it could be the year of the mega deal. Well, my guest thinks it could be. He tracks special situations and merger arbitrage at Capstone Global Markets. I want to welcome to us on this nearly holiday, Sachin Shah.
Thank you,
nice
Melissa.
To see you.
Happy Friday.
Are you a baritone? Are you a tenor?
I couldn't say.
No? Okay.
Happy New Year, by the way.
Thank you very much. Well, we won't talk song and dance right now. Let's talk about some of the deals and wrapping up the year with a deal for CVS Caremark. What's in this deal for CVS?
Yes, it seems pretty interesting. This is more kind of on the Caremark side. It seems, you know, they're going to acquire UAM, which the deal is kind of interesting because the way it's kind of structured is they're going to acquire the company. So UAM shareholders are going to get $12.80 to $13 in cash, and then they're going to get one share of the new co. So that valuation is still undetermined. So on a combined entity, it seems like they're going to have about a little over 3 million in Medicare Part D plan members.
And that's an important expansion.
Yes, and so the fact that CVS is going this route, it seems pretty obvious that they can't go the CVS route, excuse me, more the Caremark route versus the CVS route, acquiring more, you know, pharmacy stores. So this is interesting, and you're going to see some kind of unique situations like this going forward, even potentially even on the Walgreens side.
Okay, I know there's one potential deal as well I wanted to talk about before we looked at 2011, and that is with, and we've seen an increase as well with IMAX, and this is after word that Sony could be interested in purchasing IMAX, big screens.
Yes. No, the deal makes sense. I think it was also speculated that Disney may be interested. So it makes sense that Sony is interested in new technology or IMAX. I think IMAX just came out just a little while ago stating the speculation that they're not aware of. So if there is some kind of transaction, it may be known probably early next week on the Sony side as they disseminate information, and it may, if there is a deal, it could be more hostile.
Okay, Sachin, also just looking ahead to 2011, we're going to do that right after the break, but I believe we have time to just get in one more question right now. Just about 2010, when you're looking at it, I understand M&A topped $2 trillion for this year, but you look back to 2007, it's a far cry from just a few years ago. Correct.
I mean, so 2010 wasn't a robust year when you've seen mega deals. So mega deals meaning the $10 billion plus kind of transactions. You've seen a lot of transactions. There are $300, $400, $500 million, $2, $3 billion deals. A few, the 6 or 7. The McAfee deal is a $7 billion deal. So you haven't seen that many those kind of deals as you did back in 2006, 2007. You've seen a lot of transactions, a lot of deal volume, but the size of deals haven't been there. And hopefully we're going to see that in 2011.
We talked a lot about 2010. Let's look to 2011. And I know you're looking over the next, say, 3 to 4 years for kind of global restructuring when it comes to M&A.
Yes. So I mentioned this concept or thesis that I've been having over the past year or so. You know, I believe that we are in a global restructuring. And the reason why I believe we're in a global restructuring is because essentially what happened in 2008 and part of 2009. And so companies are not growing. They need to grow. They're cutting costs. And you're not only seeing this in the U.S. and Europe, but you're also seeing this occur in Asia. And you're seeing even deal activity in Asia and emerging markets in Brazil and elsewhere. So I believe that this phenomenon, you know, we could see, you know, 2 or 3% GDP growth, and people could say we're not in a recession. So the concept that I have, or the thesis that I have, is that this is going to last. And that's the reason why, kind of a slip of the tongue, I mentioned 2012, because I believe the M&A and special situations in general is going to not only be strong and great in 2011, but 2012 and even 2013. That companies and boards, for that matter, that have been reluctant to do deals or make these kind of important decisions are going to make them, or have to make them, or be forced to meet upon them in 2011.
You're a glass half full kind of guy, aren't you, today?
Yes, I mean, I really believe this, and you're seeing deal activity. I was mentioning that I was on vacation in India, and I I unfortunately had to work because there were so many announcements.
All right, well, let's talk about some of the announcements we may see next year. These are your 2011 predictions. Let's just start with RadioShack.
Yeah, I mean, RadioShack has been speculated this year, a private equity transaction. I think the cash flow is still there. It's still attractive. They generate free cash flow. They have cash on the balance sheet. It's attractive. Private equity may not be able to squeeze out that much on a restructuring level, but they don't really care as long as they generate a return for their share. Right. Their clients.
I just want to try to get through many of them. We also have Gap coming off a very aggressive campaign, which kind of flopped.
See, I think that's kind of the issue here. I think you have a lot of these companies, Melissa, on the retail side. We've seen a lot of transactions on the retail and consumer side. Just to, not to get off topic, we've seen Del Monte, we've seen J. Crew, Gymboree, we've seen Joann Stores just a week or and change ago. So you've seen a lot of deals. Gap, the reason why I like Gap is because they're generating free cash flow. At the end of the day, the numbers don't lie. They generate significant amounts of free cash flow. They've purchased between 30 to 35% of their own shares over the past 3 years, Melissa, and the owners own about 20%. So this is a classic situation where management is saying the market doesn't get it. The advertisement may flop. We're still doing business. We're still generating free cash flow. We continuously buy back shares. Well, why are you public? Right. And so I think the point here is that this is a $12 to $13 billion deal, and it's not on the radar or some. But this is a situation where you could see one of the mega deals in the private equity side.
I'm checking my watch. I want to get through quite a few of the others. We're going to do this quickly. Okay, we have BJ's Wholesale. You think will have involvement with hostile offer?
Yes, it seems that they've been in discussions with some financial sponsors or private equity. Leonard Green, I think, is interested. They've been pretty active on the private equity side, so you could see them as well as other private equity guys interested. It's been speculated for the past 3 or 4 months.
We have Microsoft, HP, possibly interested in SAP going forward.
Yes, yeah. So this is an interesting situation on the tech side. It's interesting in the concept that SAP just basically lost a verdict, and they're going to have to pay billions of dollars to Oracle. Okay, so they just made an acquisition of Sybase SY this past year. So we'll find out how well that transaction is going to play out, and if they're looking to do other deals.